Good evening, everybody. Welcome to Upstart Live, GST for SMBs. This is Mansa. I'm a part of the marketing team at PayU. So Upstart is one of the series that we do for startups, SMBs, and of course, any sort of business that is either involved with PayU or otherwise. So in today's Upstart, we have with us Pawan Sharma. He's a CA and he's the founder partner at BCL India, which is a firm providing multidisciplinary professional services. He has conducted over 90 workshops on various topics and has been in the past a speaker with Upstart as well. So a little bit on the academics end, it is notable that he in his CA finals, he was the third All India rank scorer. And he has been talking to businesses about GST and other startup advisories and also business strategies and more. So without further delay, over to Pawan to take on the session today, GST for SMBs. Thank you so much, Pawan, for being here with us today.
Thank you for the opportunity, Mansa. Hi, good afternoon, everyone. I hope you're all doing well. I will be turning off my video and sharing my screen shortly. I hope you and your loved ones are all safe. I think my screen is on now. Mansa, can you please confirm if you can see the screen?
Pawan, it's up. It's up. The screen is up. Yeah.
Okay, perfect. Let us get started. All right, so today's session is on GST for SMBs. Now I've titled this session GST, the growth story. Of course, by now, I think most of you would be aware of GST, the law, and some of you might have dealt with it on a daily basis. So I am not going to get into the law in specific, but actually the growth story, what it's been like over the last 3-4 years, for us. So let's get started. But before I begin, I would like to share a short video with you. This is an excerpt from a speech by Sanjeev Sanyal. He was the Principal Economic Secretary to the Government of India and an accomplished author. I particularly loved his books, The Land of Seven Rivers and The Ocean of Churn. Whenever you have a chance, please do read them. And here he speaks about taking the plunge into GST and everything that he said in 2018. This is the PMI National Conference 2018. And whatever he said then is still relevant today. Now, I couldn't find a better way to set the tone for our session. So it's a short video, 2 minutes. So let's hear him.
Pawan, I think the video has no sound, like we cannot hear the sound.
Oh, it does. Okay. It has subtitles though.
Yeah.
Let me just run that anyway, right?
That should do. Yes. And I think our audience wants you to go a little louder.
Oh, sure.
On your voice. Your voice. Yeah. Thank you.
Sure. Yeah. All right. So with that, let's get started. So, like I mentioned, the topic, though it's about GST's impact on the SMBs, I have also decided to go into the economic impact of GST and the economic impact on you and me, because the law is very fluid and it will take some time to crystallize. We will, however, cover some aspects of the law as we go along. So, we'll touch upon the law wherever it's necessary, but focus on the economic benefits or the economic impact of GST. First, we shall look at the SMB sector, or the MSME as the government likes to classify small businesses, and how this sector has grown over the years and what are the challenges it faces. And next, we shall turn our attention to GST. We shall see how GST has grown over the years, answer questions on its coverage and rates. Both are very touchy subjects and prone to a lot of debate. We shall look at compensation cess and how the states have been affected. And finally, we shall see the various steps that the government has taken to simplify GST. So the MSME sector first, right? So the government recently amended the definition of the SME sector, and it has brought services within its fold, and it has emphasized on services. The classification earlier was based on investments into plant, and of course, a service sector to be very, very low. So this is being changed now, and there are three classes. It is micro for turnover up to 5 crores, small turnover up to 50 crore, and medium turnover up to 250 crore. Now it is estimated that there are 6.3 crore SMEs, MSMEs in India. However, only 4% of these are registered. So between the different classes, 90% of all the registered MSMEs are from the micro segment. Further, it's also very interesting to note that 5 states, and only 5 states, Maharashtra, Tamil Nadu, Bihar, Uttar Pradesh and Madhya Pradesh, contribute nearly 60% of all the MSMEs that are registered. So while Maharashtra, Tamil Nadu and UP are ranked 1, 2 and 3 respectively in the GDP contribution, it is understandable that most of the registered SMEs will be from these 3 states. But it is surprising to see MP, that is ranked 10, Bihar, that is ranked 14, ahead of states like Karnataka, that's ranked 5, Gujarat, that is ranked 6 and Telangana ranked 7. The obvious question is why, right? Why do we have such low registrations? Why are only 4% of MSMEs registered? And why do we see such disparity between states? Now, I can give the first question a shot, and my take is that registrations are low because of two major aspects. One, the ease with which one can register, and two, the real benefits that the SMEs are deriving from registration. The good thing is that the ease of registration has significantly improved recently. The government has introduced a one-page registration form, and it has seen a lot of success with it. And the year 2020 alone saw a massive 20% jump in registrations. And hopefully we should see more of this soon. Next, of course, the benefits that the SME sector derives from registration, right? Now, once you register, what is the use, right? What do you get in return? Now, the most important thing for any SME is funding, right? That's what causes growth bottlenecks. And we all know it's very hard to raise credit from the market. And we also know it's very hard to raise loans from banks. And I speak with the help of numbers. So if you see the growth of SMB numbers, right, number wise, since the last decade, almost 10 years, the numbers have stagnated at 30 lakh crore. And this is the total funding by banks to the SMB sector, which is a priority sector. And despite all of that, the funding has been constant at 30 lakh crore. And this is despite the fact that SMBs have continued to grow in numbers, despite the fact that they contribute largely to our GDP, nearly 1/3, and also to employment generation, nearly 40% comes from SMBs. And now this is an area that needs immediate attention. So real tangible benefits are missing. But there are two noteworthy schemes that I can speak of. One is the Credit Linked Capital Subsidy Scheme, the CLCS, and the other is the Credit Guarantee for Micro Small Enterprises, CGTMSE. The first offers a subsidy on purchase of assets up to 15 lakhs, 15%, and the second offers a collateral free loan of up to 2 crores. My experience, I can tell you that getting CGTMSE loan is not very easy, but it's worth giving it a shot, right? So again, this is an area that needs a lot of attention. And for those of you who want to know more about these schemes, I have given the links here. These are government. Look at those websites and see if your business is eligible for it. So now let's get into GST. Right now, GST, as you know, contributes nearly 25% of the government of India. So out of 20 lakh crore, 5 lakh crore comes from GST alone. That's contribution to the state's coffers. Any swing down has a lot of impact on the government's budget and ability to spend. So if you look at again the numbers, this is August 17, July August 17 when GST was launched. Collections have grown 1.5 times. So in August the number was 96 lakh crore, and in April 21 it is 141 lakh crore. Of course, there is a total GST collection, right? And the component GST, that is central GST, which goes to the central government, SGST, state GST, which goes to the state governments, and IGST. IGST is a buffer account that is used to distribute credits across state. And we have compensation cess as well, which we shall cover later. Now, naturally, the GDP growth graph of India would be positively correlated with the GST revenue, right? So you see almost the same trend, right? The movement is very similar. So you know how important GST is, or how both of them are correlated to the economy of India. But we see two major blips, and no guesses what this was, right? April to June 2020, and now April 21. This is the first and second wave of the COVID. Now, thankfully, we have seen a sharp V-shaped recovery from that pit in April 20. And it's also heartening to see that the fall this time is not as sharp as April 20. So if you see in April 20, the GST collections had fallen to a paltry 30,000 crore. And if you see this year, it's almost a lakh, 3 times. So it's not fallen that badly. Also, we have seen 3 major tweaks in the input tax rules. And for most of you, if you've been dealing with GST on regular basis, you would be aware of them. For those of you who don't, this is important because that's the direction in which the GST is going to move. So the first one was in October 19, the second in Jan 20, and the third in December 20, very recent. Now these were necessary to plug loss of revenues to the government, right? And as Sanjeev Sanyal mentioned in his speech, the GST ecosystem is getting stronger by the day, and a trader can reasonably expect that his supply will be updated in real time, right? Else they will lose the opportunity to work again. And I have started seeing commercial contracts now include a clause on GST credit and filing. So if you're not passing on the credit in time to your customers, they do not want to deal with you. They don't want that business. And as far as the restrictions are concerned, the GST is a value-added tax, right? Which means that you get credit of taxes on the purchases that you make. So GSTN, that's the platform, GST network, requires you to upload all of the details on regular basis. And every customer's, so every sale of yours to your customer is your customer's purchase, right? And it is natural for them to expect that the total credit to your customers would be the sum total of all the purchases that they've done. Now, when GST was in its early days, they did not enforce a one-to-one mapping. Sorry about that. Yeah, they did not enforce a one-to-one mapping, right? Instead, what they allowed the businesses to do was, as long as you had an invoice, you can claim the credit. Now, the revenue department observed that there were some serious leakages in revenue because businesses were making claims on the basis of false documents. And so in October 19, the GST department said that the taxpayers would not be allowed to claim credit beyond 120% of all invoices uploaded against their name. So they restricted the additional credit to 20% of whatever was available on the GST portal. And in Jan 20, they reduced that to 10%. And in December 20, they reduced that to 5%. So only 105% of all the credits lying. So the day may not be very far where there would be an exact 100% matching of the invoices. So the moral story is that compliance is key for businesses to survive. In case you're not able to file your returns in time, you're not passing on credit to your vendors to your customers in time, it will be very hard for them to do business with you. They will stop doing business altogether. And the direction in which the GST is moving is we will see a one-to-one mapping of all credits, because GST is very crucial for the country's growth, for the country to have money to spend, right? So with this, let's look at the scope of GST. Now, as we discussed, the question is, should the scope of GST be widened, right? Now, the concept of GST was introduced to replace existing indirect taxes, correct? So we had the GST system and it was labeled the one nation, one tax system. And to a large extent that has been achieved and most indirect taxes have been absorbed into GST. Now with the indirect taxes absorbed, it is natural that most goods and services would be taxed under GST, right? So the concept of duty on manufacture has also been removed. But there are some major exclusions. There are some goods on which GST is not levied, and these are outside the scope of GST altogether. And these are: one, electricity, on which the state government charges a duty; alcohol for human consumption, again on which the state government charges a duty; petroleum products, on which both the central government and the state government charge duties. Now, in fact, as you can see, nearly 60% of the price of petrol goes towards taxes, and 37% of that goes to the center, 23% goes to the state. And finally, we have land and building. Now, GST law and the previous service tax law have found a very innovative way to tax real estate transactions. So long as the buyer pays advance, right, on property purchase, the transaction becomes taxable under GST. So by advance, we mean any payment that is made before occupancy certificate is received. That's the OC. Now, most developers, of course, prefer to get advances so that they can fund their construction, and which is why most real estate transactions get covered by GST. However, once the OC has been received, the real estate under law is treated as an immobile property and is outside the scope of GST. So the sale of a ready to move property is not subject to GST. It is subject to stamp duty. And again, stamp duty is a revenue to the state. So the question is it time to phase out these exclusions and include them within GST? And as you can see, almost all the transactions contribute significantly to the state government's revenues. Petroleum, of course, contributes to center as well. But bringing them within the GST ambit would impact the state government's budget. And that could be one reason why these items are not part of GST yet. Also, as the director of CIA, Mr. Chandrajit Banerjee, has rightly pointed out, with the GST framework in place now getting stronger by the day, it would be a good idea to start including these items one by one, within GST. That way we'll have all the goods and services under one tax law. Other two categories are exempt goods and zero rated goods and services. Now, under the exempt category are goods of daily necessity and services that are crucial, so critical emergency services. For example, vegetables, cereals, these are exempt. There's no GST on them, and the classification is necessary so that these goods and services become affordable to most Indians. Zero rated supplies are those on which the output GST is exempt. It's a very interesting concept. Yeah.
Sorry to interrupt. This is just for the audience. If you can hear us, please let us know, because we had issues with the hearing only when the video was on. The subtitles were there, but now I hope you can hear us properly. We are just checking. And if you have any questions, you can add it on your comments. We'll pick it up during the course of the session or after it. So please drop in your questions, and also let us know if you can hear us properly right now. We can continue, Pawan. If anything is there, I'll let you know.
Okay. So we were speaking of zero rated supplies. Yes. So yes, zero rating is a very interesting concept in GST. It's a case where the output is fully exempt, but the supplier will get full credit of input taxes. Now, zero rating is synonymous with exports, right? There cannot be a tax on exports because it is crucial that exports from India are competitive in the foreign market and are free of any local taxes. And at the same time, because as a country we would like to encourage exports, the law permits the exporter to take credit or refund of taxes paid on purchases. And this is why the country encourages exports, right? So you'll get full benefit on your inputs. Of course, they're subject to a lot of conditions, and in my experience, I've seen that SMBs sometimes don't comply with it, and they lose out heavily on the benefits that come with zero rating. And so, again, I stress on the importance of compliance again, right? For example, making sure that you receive the consideration in foreign currency, don't get it in INR. Make sure that you raise your invoices correctly, you get your letter of undertaking, mention the letter of undertaking on the invoice, right? That's the way by which you can avoid questions later on by the department. uh, Let me pause here and just see if Mansa 1 is the audio okay. um, okay, perfect.
Yes, Pawan, it's pretty
Okay,
clear. We are still awaiting questions from the audience. Like I said, if we have it,
sure.
like the audience is free to drop in your questions. Pawan will stop and answer it if it makes sense, or we will wait until the end of it. So please send in
Sure.
your questions. Thank you. Thanks, Pawan.
Okay.
This is good. We can go on.
Okay, thanks. Next. Yeah, so I'll get on to the rates, right? GST rates. Now, I've been part of a lot of debates in GST about the GST rate structure in India. Now, is this the right system, right? Do we have too many tax rates? Do we have too few tax rates, and so on? There's a lot of debate. And my personal opinion is that the rate structure in India is pretty good. Now, it's the best that we could have. Now, of course, can it get better? Yes. Now, I would like to justify my opinion by comparing India's tax rates with other countries who have implemented some form of sales tax. Most of them have implemented a form of VAT very similar to GST. And I do this comparison with 8 other countries: Australia, China, Germany, Japan, Malaysia, Singapore, UK, and US. Now, let's first see what are the GST rates in this country. Now, in Australia, the standard rate is 10%. China has multiple tax rates, anywhere between 1 to 56%. The standard rate is 13. Germany has two broad rates, standard rate being 19. Japan again 8 and 10, standard rate being 10. India has 5, 0 to 28, standard being 18. Malaysia has 3, standard being 10. Singapore is the cleanest, just like Australia, single rate 7. UK has 2, and US, it is state-wise. They don't have a single all one nation tax, but they have a state-wise rate, and it ranges, right, state to state. So it would appear from this table that our GST system is more complicated than most countries, barring of course China and the US. But while most countries have 2 or 3 rates, we have 5. But you also have to understand this from the perspective of the situation India is in, right? So let's add some more metrics to this. First, I have looked at an analysis called the Ferens analysis. It's a very, very interesting method of calculating what the diversity in a population is, right? Now, this is how it's defined. Now, if you pick two individuals randomly from the country's group, any group, right? What is the probability that they are not from the same group, right? So this principle can be applied on ethnicity, on language, and religion. These are the three broad buckets. Now, given that it's a probability, 1 would be the highest, which would mean it's highly diverse. 0 is the lowest, which means that there is least diversity. We have country-wise data, and I've compared how India fares with these 8 nations, and it throws up some very, very surprising numbers, right? It shows that US and Malaysia are more diverse than India. Singapore is very, very close to India. Now, I was very shocked seeing these numbers. I was expecting India would be way ahead, but when you break down these numbers, it makes a lot of sense. Now, India scores very high on linguistic diversity, naturally so, but it scores low on religious diversity because nearly 80% of the population follows the same religion. Similarly, India scores low on ethnicity as well because we belong to the same cultural group. Now, with this analysis, you can understand why the data for US and Singapore makes so much sense, right? It's a country with a lot of migrant population. Malaysia scores a 0.6 on all these counts, and it takes the number beyond India. But the question is, why is it relevant? Now, why am I using Ferens analysis here? It is because of a country as diverse as India, we have very diverse consumption habits. We cannot have a single or dual rate structure to accommodate all the consumption patterns, right? Which is why the need for multiple rates. Next, let us add another metric, poverty line. Now, what is the percentage of population below the poverty line? Now, India is amongst the highest in the world. And while some countries can afford to tax daily necessities, we just can't. We have to make sure that the bulk of our goods and services fall in the lower rates of taxes. And mostly the luxury goods are the ones that are taxed at the highest rates. And another metric, the final one, let's look at the ease of doing business, right? Which is more of a fallout of what the rate structure would be. Now, can the argument that a simpler rate structure translate to a higher ranking? The simple answer may be yes, but look at US. which has state-wise rate structure but is ranked 6. Look at China, whose rate structure is a little more complicated than ours, ranked 31. Right, so while that structure might mean better ranking, there are far more metrics, that have an influence on ease of doing business. So, like I said, the rate structure in India is good. Can it get better? Yes. I think slowly there would be a convergence around the 18%, but as of now, I think the rate structure is very good. Here, it's also important to note that as a business, you have to be very sure of where your product or your service is classified. We use a harmonized nomenclature system. It's the HSN. It's what we have borrowed from the customs law. Each rate is linked to an HSN, and an incorrect HSN would mean that you pay the wrong rate of tax, which means that you would be liable to penalty if the department catches you. And most likely they will catch you because you have to upload details of the HSN-wise sales. So please make sure that you're very clear of what your classification is, your product and your service. Go back to the rate structure, go back to the law and check if the classification is correct. Who knows, you might also be eligible for certain exemptions, right? Because exemptions are linked to HSN. So that's on the rate structure. I will turn my attention to compensation.
Pavan, we are losing you.
Exports, it's between you and your maker, right? There's only about tax. So it's on luxury and sin goods, and it was created to pacify state governments essentially because they were afraid of losing taxes. Compensation cess is levied on goods like motor cars, tobacco products, aerated drinks. Now it's levied on top of the GST rate. Thus, on motor cars, you could be paying up to 25% more above and beyond the regular GST rate of 28%. And the funds that are collected in the name of compensation cess are used to compensate states, the name, right? Compensation cess. It's used to compensate states for any loss of revenue that arises to them because of GST's implementation. In fact, state governments were assured a year-on-year growth of almost 14% on their pre-GST tax collections, and this was up to July 22. 2015-16 was to be used as the base year. So every year they had to get a 14% increase. If there was any gap, the center would compensate them using the compensation cess. Now this was the in which the central government in 2017 was able to bring in the GST. States agreed to give up their right to tax. I would like to emphasize here it's not easy for a state government to give up this right. The state spends, right? It depends on you and me. Now, if the state compensated shortfall, it impacts all of us because infrastructure projects, roads, hospitals, education. But the compensation cess has run into a considerable amount of trouble. Right now, 2019 started raising concerns about not receiving compensation cess in time. Now, these sums were pending since 2019. Nirmala Sitharaman, she played this down and she offered an explanation which not many states were happy with. But if you look, these are as 22, almost 1.51 lakh crore is what is due to states. Now that's almost 30% of the GST collection. That's a lot of money, right? The central government earns 5 lakh crore from GST, CGST collections and to the states. The its dues to the various states, 20,000 crore spending for Maharashtra, the flood 9,500. The compensation that it got from the center was 1,800 crore. The fact that nearly 5 times of that compensation amount, right, maybe Karnataka would be able to handle this disaster better, right? Have a little more funds. So compensation are very also law had retained a sum of nearly 50,000 crore. And this was money that had to go to states, but they diverted the funds into the Consolidated Fund of India. Never transferred it. There's another account called the public accounts, from where money goes to states. So they never sent money into the public account. It was lying in the Consolidated Fund of India. And what happened was they inflated the collections and they understated the deficit, fiscal deficit. But this was money that had to go to states. The center ended up using it for other purposes. And what the center also said was the economic slowdown aggravated the issue. COVID, made matters worse. We were not able to get enough money. The finance minister actually hit back saying that the center could not compensate the states as collections were affected due to COVID, and COVID is an act of God. Now, you try saying that to the tax department when you are filing your tax returns, right? I'm sorry, I cannot pay my taxes this year. COVID was an act of God and I have no money left, right? All the best with that, because the government expects you to pay your taxes in time, right? So the state governments could have same expectations. So the whole situation was becoming a major embarrassment, to the state, to the center, and a better sense prevailed to the center. Then finally decided that we'll borrow money from the market to compensate the states. Now, why is this important, right? Understanding this is very important, so that we know why the difficulties that while introducing GST in the first place. GST was mooted in 2000s. Now it has taken 20 years to introduce this tax. Now, looking at the way compensation cess was handled, the fear of state governments was not entirely misplaced, right? We don't know how much of money would actually come to states. Ultimately, it is the state government answerable to its people. So that's the story about compensation cess. It is more or less resolved. We hope that we will find some solution to this, a permanent solution, so that state governments can get the money that is due to them, right? Now, let us look at simplifying GST, right, and what is in store. So GST was introduced as a good and simple tax by the Prime Minister. Now, you ask anyone who has dealt with this tax hands-on practically, it is anything but good, anything but simple. The law is quite complicated. The GST filing system adds new challenges to the taxpayer. The framework, the intention is very good. Coverage is good. Rates are decent. But implementation, the actual GST portal, that's where things get a little messy, right? Now, there are several instances where taxpayers have complained about the ineffectiveness of the tax filing portal. Now, this may not be a surprise to most of you, but filing returns in India is quite challenging. Now, the World Bank's data shows that the Indian taxpayers spend almost 250 hours or nearly 31 working days, that's 1 month, just filing and paying taxes. The highest in the world, amongst the highest. Of course, there are outliers. The other countries like Brazil, which spend 1,500 hours. Now, I don't know if that's even true, right? That's 188 days. It's half a year, right? I don't know if it's true, but if you just look at India, it's a month. And from my personal experience, I can say it's not very far off, right? That's the amount of time that it takes to make sure you're filing your returns in time. Otherwise, of course, there are penalties, there are fines. Now, if you look at the rate of tax also, the area chart behind in yellow, India is not very low. It's about 22%. Now, of course, the government has been reducing these taxes steadily over the years, which is a very good thing. But 22% is quite high, right? So it's above other nations. But think of this, now, if a taxpayer is spending 1 month every year just taking care of compliances, just filing returns, that translates to a loss of 1 month's revenue to the taxpayer. And of course, for the government, it is a loss of 1 month's taxes, correct? So there are very clear incentives to simplify the tax regime, right? And of course, Nirmala Sitharaman in the National Traders Convention also said that wherever there's a possibility, they are trying to simplify GST. And indeed, they have simplified GST. There are a lot of changes that have come forth over the last year or so. The latest scheme is the quarterly return and monthly payments into it. Of course, there are some cases where the GST portal automatically transitions you to the QRMP scheme. And this was announced for small businesses and the turnover was less than 5 crore. And under the scheme, a taxpayer can file GST R1 and 3B on quarterly basis. The payment, however, will be on monthly basis, and the payment can be either an estimated sum of 35% or the actual self-assessed amount, right? So either option is available. There's e-invoicing that will be introduced, and invoicing is being made mandatory for businesses with turnover of more than 50 crores. And e-invoicing promises to plug gaps in the tax collection system, right? It will help drive data automatically, real-time tracking of sales. Now, of course, this is applicable to the medium segment of the SME side. Micro and small are out, but if it is successfully implemented, we may see a day where it's implemented across. Next, the process of getting refunds has improved. 90% of the amounts is provisionally given out as credit, and in my own experience, I've seen the process is getting tighter. It's getting better over time, and the right questions are being asked. And GST registration is also much faster now. It can be done using an Aadhaar. Taxpayers can file nil returns by just using SMS, right? Just through an SMS, and annual returns are now self-certified, right? So a lot of steps are being taken. Of course, there'll be more and more steps that will be taken to simplify, right? And what is exciting is what's in store, right? There's a lot in store, and the government proposes to link e-way bills to FASTag. Very interesting, so that they can track the real-time movement of goods. Very soon we could see 100% input-output mapping, and this will avoid tax leakages. And a very, very interesting concept about sector-wise tax filing processes, right? For example, if you take a pharmaceutical companies see more returns due to expired stock than an automobile industry, right? Now, why should their returns be the same? So we could see sector-wise tax filing processes. Right, GST version is underway. So that's my presentation, right? And I hope I was able to give you a broad idea of how GST has progressed over the years. That's about me. You can write to me, Pawan at bclindia.in. You can visit our website, bclindia.in. And I am also very proud to announce the launch of a new product, free invoicing, a tool that is dedicated to small service providers. They have to jump through a lot of hoops to create a very simple GST compliant invoice, but it is a cumbersome process for them. So we've launched this platform, and it will help you create a fully compliant invoice in under 30 seconds. All of this is for free, and the product is built in partnership with one of the best technical minds that I've come across in my career. He's an MIT professor, alumni of IIT Ahmedabad, and his name is Mr. Hart Singh. You can log into our website, freeinvoicing.in. We'll be going live in a week, so do visit our website, freeinvoicing.in today. Any questions, feel free to write to me. I'll pause now. Once if there are any questions, would be happy to take them.
Yes, Pawan, I'm waiting for the questions from our audience. Just give us a while. We'll see if there's anything coming from them.
Sure.
Pawan, there was a rule that came out around GST, I think around a year ago. So businesses with annual turnover of 6 crores and above are required to pay at least one GST in cash, a liability in cash, 1%. What exactly is that? And could you please elaborate on that, please?
I'm not aware of this. What the rule said was that 1% of the amount lying in the electronic cash ledger would be blocked. And that was a strange rule, and it was for large taxpayers, where they said that you can use 99% of the amount lying there, but 1% will have to remain in the electronic cash ledger. Okay, so there are two ledgers. There's a cash ledger and there's a credit ledger. The credit ledger is where all the inputs sit. Cash ledger is where your money sits, right, to pay amounts. So this rule said that 1% of the amount should always be lying there. You cannot use it. I don't know why they did it. but that's the rule, but it's for larger players, not for small, medium enterprises.
Yes, Pawan, got it. So I think we'll still wait for the audience. Anything that you can add regarding startups? Anything that has come newly? Anything that people have to keep a lookout for? Anything as closing that you would like to share before we close?
Sure. Sure, for startups, of course, I hope most of them are registering on the startupindia.gov.in website. Uh, there are two different types of registrations. Right? One is the generic Startup India registration, and with that, you can make a simple Form 2 declaration. And with the Form 2 declaration, you are protected from the angel tax issues, because angel tax had created a lot of problems for startups. So that's a simple declaration. I would advise most startups to go and get themselves registered and file that declaration. It gives you a lot of protection. And of course, you have your ATISC, which is your tax exemption window for 10 years. They extended it last year, by the way, in the budget, sorry, in this year, Feb 21. And which means you get a tax window of 10 years. You can choose any 3 years, right? Now, of course, I have not seen a lot of startups benefit from ATIAC because the number is very small out of the total number of startups that are registered. Those qualifying under ATIAC is hardly 1 or 2%. But at least the Form 2 declaration is pretty simple, right? So I would urge most of them to get that declaration.
Someone from the audience, Joshua, asks, what about the draconian effect for MSME?
I'm not sure if I understand that question right, because what a draconian effect for MSME, if Mr. Joshua can expand it a little, that will help me.
You can just add that in the comment, Joshua, again. It will help elaborate. I believe it's with regards to the GST itself. I don't know to what extent he means by the question. It's something around that. He's not able to get the next part of the question in. Maybe we'll wait for a few seconds, and after that we can
Sure,
close the session.
sure.
Sure. I think, Pawan, we could close. Thank
Sure.
you so much for being a part of this session. It was wonderful having you here, and it's always wonderful having you back as the speaker. Thank
Thanks,
you to our
Mansa.
audience as well. Thank you for being a very interactive audience and for letting us know when you couldn't hear us. We hope you enjoyed the session as much as we did. Please check out our session tomorrow that's happening, and every alternate day we have events this month, especially around the SMBs. So please do come on our LinkedIn page and click on Remind Me for any event that comes up. Thank you so much once again. I hope you all are staying safe and taking care. Thank you.
Thank you. Thank you all. Thanks, Mansa.
Thank you, Pawan. Take care. Bye.